Something fundamental is shifting in global monetary systems right now. The movement toward gold at $5,000 isn't speculation. The path toward silver at $100 isn't hype. These represent structural adjustments to decades of monetary distortion. Most analysts view recent precious metals gains as cyclical. They expect normal corrections and pullbacks soon. They're missing the underlying forces driving permanent change. This isn't another bull market that will reverse. This represents monetary system reset. Global debt has reached mathematically unsustainable levels worldwide. Total debt now exceeds $300 trillion. Now that's 3 times larger than global economic output. Interest payments alone consume increasing portions of government budgets. The United States federal debt exceeds $38 trillion. Annual interest payments exceed $1 trillion for the first time. These payments represent 20% of total government revenue. Any significant rate increases make debt service impossible. European debt ratios approach similar crisis levels rapidly. Japan's debt exceeds 260% of GDP. China's total debt, including corporate and local government obligations. These approach dangerous levels that threaten financial stability. Central banks face impossible choices in this environment. Raise rates to fight inflation and crash debt markets. Keep rates low and destroy currency credibility permanently. Neither choice provides sustainable long-term solutions currently. The Federal Reserve has tried both approaches recently. They raised rates aggressively through 2022 and 2023. Bond markets experienced their worst performance since 1940s. Regional banks began failing from interest rate exposure. Now they're pivoting toward easier policy again. Money printing resumes to prevent debt market collapse. Currency debasement accelerates through quantitative easing programs. Real interest rates remain negative despite headline rates. European Central Bank faces similar impossible policy choices. German industrial recession requires monetary stimulus urgently. But Southern European debt loads prohibit aggressive easing. Political tensions increase from conflicting regional needs. Bank of Japan continues massive money printing programs. They purchase more bonds than their government issues. Their balance sheet exceeds 100% of GDP. Currency intervention costs increase exponentially with each defense. These central bank policies destroy confidence in paper assets. Bondholders face guaranteed real losses from inflation. Currency holders watch purchasing power evaporate consistently. Stock markets become disconnected from underlying economic reality. Meanwhile, central banks themselves accumulate physical gold aggressively. They've purchased over 800 tons annually recently. This represents 25% of total global production. Their actions contradict their public monetary rhetoric completely. China leads central bank gold accumulation with strategic purchases. They've added over 300 tons in recent years. Russia maintains large gold reserves despite sanctions pressure. India, Turkey, and Poland expand reserves substantially. These central banks understand what individual investors don't. Fiat currency systems approach mathematical breaking points rapidly. Physical assets provide the only reliable value storage. Gold serves as the ultimate currency during system transitions. Silver presents even more compelling dynamics than gold. It combines monetary properties with industrial necessity perfectly. Investment demand competes directly with industrial consumption. Supply constraints create explosive price potential during crises. Industrial silver demand continues growing despite economic uncertainty. Solar panel installations require massive silver quantities annually. Electric vehicle production consumes increasing amounts consistently. Electronics manufacturing cannot substitute alternative materials easily. Defense applications drive additional silver demand consistently. Military electronics require silver's unique conductivity properties. Missile guidance systems depend on silver components entirely. Electronic warfare capabilities consume substantial quantities regularly. Medical applications create inelastic demand for silver consistently. Antimicrobial properties make silver irreplaceable in healthcare. Surgical instruments require silver coating for infection control. Wound care products depend on silver's healing properties. Supply-side constraints amplify silver's price sensitivity substantially. Primary silver mines produce only 30% annually. The remaining 70% comes from byproduct production. Base metal mining reduces silver supply automatically. Environmental regulations restrict new mine development significantly. Existing mines face declining ore grades consistently. Processing costs increase faster than inflation rates. Recycling cannot match industrial consumption growth patterns. The mathematics create inevitable supply shortages during demand surges. Annual production equals 800 million ounces globally. Industrial consumption absorbs 600 million ounces normally. Investment demand during crises can exceed remaining supplies. Silver's monetary history spans thousands of years consistently. Ancient civilizations used silver as primary money. The United States used silver coins until 1965. Silver maintains purchasing power during currency debasements, but silver's industrial applications didn't exist historically. Modern demand combines monetary and industrial forces simultaneously. This dual nature creates price volatility exceeding gold. Supply shortages affect both investment and production. The current silver price around $30 reflects normal conditions. Crisis demand conditions could drive prices exponentially higher. $100 represents mathematical possibility rather than speculation. Supply constraints make higher prices inevitable eventually. Energy transition policies accelerate commodity demand across sectors. Renewable energy requires massive mineral inputs consistently. Electric vehicle production consumes multiple critical materials. Grid infrastructure modernization needs enormous copper quantities. Copper demand approaches supply limitations within 5 years. Green energy transition requires doubling current copper production. New mine development cannot match projected demand growth. Existing mines face depletion and declining grades. Lithium demand exceeds supply capacity for battery production. Processing facilities cannot match raw material extraction rates. Price volatility reflects supply-demand imbalances increasingly severe. Strategic minerals become geopolitically significant resources rapidly. Rare earth elements face Chinese supply monopolization concerns. Western nations depend on Chinese processing capabilities. Alternative supply chains require decades to develop fully. Strategic competition increases resource hoarding behaviors globally. These commodity pressures support precious metals indirectly. Resource scarcity creates inflation expectations among investors. Central bank policies cannot address supply constraints effectively. Physical assets become preferred wealth preservation vehicles. The timing coincides with geopolitical tensions increasing globally. Trade wars disrupt established supply chains significantly. Sanctions weaponize financial systems against participants regularly. Nations seek alternatives to dollar-dominated commerce increasingly. BRICS nations develop alternative payment systems actively. Gold-backed trade settlement reduces dollar dependency gradually. Commodity-based currencies provide inflation-resistant value storage. Physical assets become geopolitically neutral wealth stores. China and Russia promote gold-backed international trade. Saudi Arabia considers non-dollar oil sales possibilities. India develops rupee-based trade settlement mechanisms. Brazil explores commodity basket currency systems. These developments reduce global dollar demand systematically. Excess dollars return to domestic markets, creating inflation. Federal Reserve loses monetary policy effectiveness internationally. Dollar debasement accelerates through reduced global demand. Gold and silver benefit from reduced dollar hegemony. Alternative monetary systems require physical backing assets. Commodity-based currencies need precious metals reserves substantially. International trade diversification supports hard asset demand. The demographic factor amplifies precious metals demand significantly. Baby boomers control substantial wealth approaching retirement. They seek wealth preservation over growth investments. Physical assets provide security during currency instability. Millennials face housing affordability crises in major cities. Traditional investments appear overvalued relative to incomes. Alternative assets, including precious metals, attract younger demographics. Digital gold products make precious metals accessible globally. Generational wealth transfer begins accelerating through inheritance patterns. Older generations accumulated wealth during stable periods. Younger generations face monetary system instability increasing. Precious metals provide intergenerational wealth preservation vehicles. Institutional adoption of precious metals accelerates through policy changes. Pension funds increase alternative asset allocation systematically. Insurance companies seek inflation-resistant investment options regularly. Sovereign wealth funds diversify from traditional bond holdings. Exchange-traded funds make precious metals accessible to institutions. Physical backing requirements create additional demand sources. Fund inflows remove metal from available supplies permanently. ETF popularity democratizes precious metals investment access. Cryptocurrency adoption ironically supports precious metals simultaneously. Digital asset volatility demonstrates hard asset stability. Blockchain technology enables fractional precious metals ownership. Crypto wealth profits often rotate into physical assets. The technology revolution requires massive mineral inputs consistently. Artificial intelligence systems need specialized semiconductors containing silver. Data centers consume enormous electrical infrastructure requiring copper. Renewable energy integration demands grid modernization using silver. 5G network deployment accelerates silver demand through infrastructure. Internet of Things devices multiply electronic components exponentially. Electric vehicle charging networks require substantial electrical infrastructure. Smart Cities Initiative consume massive quantities of industrial metals. Space exploration and defense spending increase strategic metal demand. Satellite technology requires precious metals for electronic components. Military modernization programs consume increasing commodity quantities. Strategic competition drives resource stockpiling behaviors globally. Medical technology advancement increases silver demand through applications. Antimicrobial surfaces become standard in healthcare facilities. Medical devices incorporate silver components for reliability. Biotechnology research utilizes silver in development processes. Financial system stress indicators continue accumulating across metrics. Banking sector faces commercial real estate exposure risks. Insurance companies struggle with bond portfolio losses. Pension funds cannot meet obligations through traditional returns. Regional bank failures demonstrate system fragility increasing. Credit markets show spreading stress beyond headlines. Corporate debt levels approach unsustainable ratios globally. Consumer debt burdens reach historical high levels. These stress factors support precious metals through safe haven demand. Financial system instability drives asset diversification behaviors. Currency debasement expectations motivate hard asset accumulation. Wealth preservation becomes priority over return generation. The manufacturing sector faces supply chain transformation permanently. Just-in-time inventory models prove fragile during disruptions. Strategic stockpiling becomes necessary for production security. Commodity hoarding behaviors increase industrial metal demand. Globalization reverses through reshoring and friendshoring initiatives. Supply chain localization requires domestic resource development. Critical material security becomes national priority increasingly. Resource nationalism increases hoarding and export restrictions. Climate policies accelerate resource transition demands exponentially. Carbon reduction targets require massive infrastructure investment. Green technology deployment consumes unprecedented mineral quantities. Environmental regulations restrict traditional mining expansion significantly. The investment landscape transforms through inflation persistence patterns. Traditional 60-40 portfolios fail during stagflation periods. Real assets outperform financial assets during currency debasement. Commodity exposure becomes essential portfolio diversification component. Modern monetary theory consequences emerge through policy implementation. Government spending increases without taxation or borrowing constraints. Money printing funds fiscal programs directly. Currency debasement accelerates through debt monetization explicitly. The result creates permanent inflationary bias in monetary systems. Central banks cannot maintain price stability credibly. Savers face guaranteed purchasing power losses consistently. Hard assets provide the only inflation protection available. Historical precedents support precious metals. Performance during transitions. Weimar Republic hyperinflation drove citizens toward hard assets. 1970s stagflation created gold and silver bull markets. Currency crises consistently benefit physical monetary assets. But current conditions exceed historical precedents significantly. Global debt levels surpass previous crisis periods substantially. Central bank coordination attempts face political constraints increasing. Alternative monetary systems develop simultaneously reducing dollar demand. The technological capabilities enable rapid capital flows globally. Digital platforms facilitate precious metals investment access. Cryptocurrency infrastructure enables alternative settlement systems. Information spreads faster, creating synchronized investor behaviors. These factors combine, creating unprecedented precious metals demand. Supply constraints coincide with monetary system transition. Industrial applications compete with investment demand directly. Central bank accumulation removes supplies from markets. The conclusion emerges clearly from multiple analytical perspectives. Current precious metals price increases reflect structural changes. Monetary system reset accelerates through debt mathematics. Currency alternatives develop, reducing fiat money credibility. Gold approaching $5,000 represents mathematical probability. Silver reaching $100 reflects supply-demand realities. These aren't speculative targets, but inevitable destinations. The only question involves timing rather than outcomes. Understanding these dynamics requires recognizing historical patterns clearly. Monetary systems transition when debt becomes unsustainable. Physical assets preserve wealth during currency transitions. Central bank policies accelerate rather than prevent changes. The signs indicate new monetary era beginning rather than ending. Fiat currency systems approach mathematical limitations rapidly. Alternative systems develop, reducing traditional currency demand. Physical assets provide stability during transition periods. Investors who recognize these structural changes early position appropriately. Precious metals offer wealth preservation during system transitions. Industrial metals benefit from infrastructure transformation demands. Physical assets outperform financial claims during currency debasement. The breakthrough in gold and silver represents permanent change. Structural problems accumulated over decades reach resolution points. Central bank policies cannot prevent mathematical inevitabilities anymore. New monetary arrangements emerge supporting hard asset values. This process continues regardless of short-term volatility patterns. System reset occurs gradually through policy responses. Physical assets maintain value through transition periods. Understanding these dynamics enables appropriate positioning decisions. The new monetary era favors physical assets over financial claims. Currency debasement continues through policy requirements inevitably. Resource scarcity supports commodity values systematically. Precious metals provide optimal wealth preservation characteristics. Recognition of these changes separates successful investors from victims. System transition creates both opportunities and risks simultaneously. Physical assets offer protection during monetary system reset. The breakthrough represents beginning rather than climax.